Okay. First of all, thanks to Marine Money for having me. My name is Frederik. I'm representing Njord. Njord is a business venture established between Cargill, Mitsui, and Maersk Tankers. And our focus is actually to accelerate decarbonization through what we call green tech, energy-saving devices, something that has been discussed a lot during the day. And our focus is to help ship owners and charters get through on their transition through ESDs. So, as presented, the topic of my presentation is common beliefs about green tech investments and why they are misleading, because there's actually quite a number of beliefs in there today that are misleading and are hampering the process for actually happening and the transition to happen. So I'll start with this graph, basically. So this is not a discussion on whether decarbonization has to happen or not. This is discussion around how it will happen. And I've actually stolen this graph from the Maersk Mc-Kinney Møller Center for Zero Carbon Shipping and McKinsey. And this basically shows us the transition. And I'm super happy about the discussions that has happened today around transition. What this graph shows us is the combination of how efficiency will play in and how the new green fuels will play in. And I think the interesting part to note is actually that it's going to be somewhat 50-50 on both sides of the table. And I would like to refrain from talking about efficiencies being a transition element. It's actually a long-term enabler for the new green fuels. We've talked about it slightly a couple of times throughout today. One thing is the cost of the new green fuels. We know that they are going to be way more costlier than the fuels that we know of today. The second thing is the density. We also know that the new green fuels, the volume that they require to travel the same distance is going to be much higher. And then lastly, there's the supply-demand ratio. Because of infrastructure and production, we also know that that's going to be hampered from the get-go. So all of those factors ensures or actually makes energy efficiencies a must-do, both here and now because we can, but also in the long run to enable the new green fuels. So that's all well done and dusted. Does that then mean that we're actually adopting already now the efficiencies out there today? Well, you would like to think so, considering the fuel prices and how they went through the roof in 2022. Suddenly we saw that investing in energy-saving devices was a much better business case that we've seen in the past. Then we also seen a surge of new techs coming into the market. I think a buzzword in 2022 and also maybe in 2021 was wind-assisted propulsion. Everyone was talking about it, but how many was actually adopting it? And besides wind-assisted propulsion, there's a lot of other technologies that are emerging day to day at the moment. In Njord, we have been in dialogue with more than 100 different ship owners and charters throughout 2022 alone, and I can tell you that there's quite a big gap between what's doable with today's technologies and what is actually being done. And I would like to explore that gap a bit more. So, back to the topic, the common beliefs about green tech investments and the considerations and the current barriers. The barriers is what is driving the gap between what can be adopted and what should be adopted. The first barrier, or the misbelief basically, is that ESDs, they don't have a meaningful impact. The majority of the owners and the charters that we talk to today say, well, you might be able to apply one or two technologies. It's going to take you some part of the way, but really it's incremental, and we must focus on the green fuels instead. And that's the first misbelief, or the first barrier. The second thing is that the return on investment is either too long or just in general doubtful. When we discuss with owners and charters, they say, I might invest in this technology, but will I really get my money back? Is it really going to deploy that efficiency that I'm paying for? And if so, it's probably going to be 5, 6, 7 years. So who knows where my asset is at that point in time. So it's not worthwhile for me to invest, and I can't also convince my investors or my charter to actually go and invest in these technologies. And then lastly, there is no, or at least limited access to funding. So if I can convince myself that energy-saving devices is the way to go, I can have a meaningful impact. If I believe the return on investment is actually proper, then I'm missing the financial incentive, or I'm missing the financial vehicle to actually get me there. That's the last barrier as we see it. So let me challenge those barriers. Which technology should we invest in? When we talk to owners and charters, majority are looking into two very common ESDs. They look into quality anti-fouling and propeller enhancements. It's very typical. It's becoming, I would say, mundane, and this is what many believe is actually a proper investment and will have a proper return on investment. Fact of the matter is, there are more than 20 different energy-saving devices out there today. We cannot limit, and we should not limit ourselves to only these two. And the most interesting point is, if you start combining these technologies for the right vessel, right combination with the right suppliers, then suddenly you flip the scenario. You'll actually have much higher efficiency, and you will actually start to see acceptable or quite attractive return on investments for these packages of ESDs. So keep this concept in mind, and then let's revisit the barriers that I just went through before. There we go. So the first one, energy-saving devices does not have a meaningful impact. If we combine them in the right way, if we look at it holistically, if we talk package solutions instead, then actually we'll have a significant impact, and it's achievable through these combinations. So through the projects that we run in 2022, we're not looking at 2 to 4% anymore. We're looking at an average between 7 to 16% enhancements. And if we go crazy and take all the basic technologies out there, and we add some of the more novel technology, air lubrication, wind assisted propulsions, etc., then we actually go beyond 25%. So I would ask, is 25% not a significant improvement? Yeah, I would say this. Then we look at the return on the investment. It's either doubtful or too long. Well, we've actually found that there's technology out there today, and if you apply a proper process, you can actually measure quite accurately the combined effect from before you install to after you install. And it's actually black and white. You can see the effect of what you have applied. You just need to run with the right methodology. And if you start combining technologies and have a holistic approach, looking at it across many technologies, you will, instead of looking at it individually on a very high return on investment, you will actually see the average return on investment is much more attractive. So when you mix them, you mix LED lights with Flettner rotors. I know in terms of the investment, it's not the same size, but that principle of mixing multiple technologies will mean that the average return on investment is much more attractive. We have seen throughout the projects we have made that we are typically within 2 years when it comes to return on investment, back to the 7 to 16% improvement. So again, a good business case, 7 to 16%, somewhere there in between, and it's still within 2 years. I think that's quite attractive. Even if we go to the plus 25%, as I mentioned before, we actually still keep the return on investment period within the 5-year dry docking cycle. So a lot can actually be done within an acceptable timeline. And then the last element, no or limited access to funding. I think there has been some great discussions today. I think the panel of where we had some of the banks from the Poseidon Principle up here, they were really onto something here. We have definitely seen, working in between charters and owners, that there's much more willingness today to discuss how to finance these packages. There's much more willingness because they can see the effect. There's much more willingness because the return on investment runs within the TC period. So I think actually that conundrum is being broken down. I've also been in dialogue with a number of financiers, and I can see and hear that there's an intent to be much more focused on retrofitting existing fleet. We've discussed it also throughout the day, that instead of focusing on new builds, focus on the existing fleet. And I think that it's on the rise. But I think I would also leave today with a challenge, and maybe this is the perfect forum to do just that. Do we have the right vehicles in place? If we all agree that this is a way to go, if we can't discuss whether the effect is high enough and the return on investment is actually low enough, then why are we then missing all the right vehicles here? So I think I will leave you with that challenge, and I will be happy to discuss that afterwards at the cocktail party. Bottom line, or essence of the story is, tailor-made combined energy-saving device solutions is what will accelerate decarbonization here and now. It's not only a transition, it will actually be an enabler for us to go to zero all the way through. Thank you very much for listening in.